Hello everyone, PS from PS Invest Plays here today. We're going to speak about two interesting stocks in this video. The first one is one of the largest banks in the world, and the second one is the biggest EV company in the world. In this video, I'm going to look at macro and micro landscape that benefit and work against both of them, do a technical review, provide my stock price prediction, short and long term for both of them, and finally provide my recommendation on which one to buy, hold and sell. So stick around. I think you'll like what I have in store for you today. If you like this video, please don't forget to subscribe. Hit the like button, leave a comment and share this video with your friends and family. With that said, let's get started. The first one on our list is Jpmorgan Chase, ticker JPM. It is one of the largest banks in the world, and I think they manage approximately $2 or $3 trillion of assets. Oof, that's a lot. Let's look at the macro landscape first for Jpmorgan Chase. 2021 is the year of reopening and higher inflation. Instability in the markets will be there due to uncertainty. Now, when I say uncertainty, it's related to inflation, the Fed pulling back on bond purchases, and also increasing interest rates, which the markets don't like. However, I don't see that happening in 2021. Inflation will rise, but none of the other factors would happen. What I do see is in 2022, Fed will reduce its bond purchases due to higher inflation and improving economic outlook. And that should result in increase of interest rates. Now, whenever these scenarios happen, what I have seen as a trend in the stock market is that the markets tend to perform well. For example, 2013 and 14 and 2017 and 18 were classic years where these scenarios played out and the markets performed really well. Now, from a micro landscape for Jpmorgan Chase, the things that benefit Jpmorgan Chase are the consumer spending is benefiting all the financial companies, aka banks. Jpmorgan Chase has beaten EPS estimates in the last 3 quarters, and I think they should continue to do so in the subsequent quarters. It is considered a value play in 2021, and in 2022, the increase of interest rates should add to profits for Jpmorgan Chase. Also, Jpmorgan Chase pays very good dividend. The chart for Jpmorgan Chase is really interesting, and I like when I see a lot of data that goes back at least 10 to 20 years. In this case, we have data going as far back as 30 years. What I see going as far back as 30 years is that the Jpmorgan Chase stock is in a longer bull run. That started in 1992. The first wave of this bull run seems to be getting over with a price target of $197.68. After this price point, I think there will be a stronger pullback where the stock price can come down to as low as 125 or 120. Now, if we take a closer look at this first wave, which is highlighted in red, what we see that the final fifth wave is undergoing right now, and in this fifth wave, the first 4 waves Wave 1, 2, and 3 and 4 are completed, and the stock is marching towards its final bull run, taking its price to $197. That means there is still 20% upside left. When can we achieve that? I think in the next 1 to 2 years, this price should be achieved. And my recommendation would be that as soon as this price point is reached, exit this stock. Now, let's look at the biggest EV company in the world, Tesla, ticker TSLA. From a macro landscape, it's pretty much identical to what we spoke earlier. However, what I think, even if technology continues to do good in 2021 and 2022, it will lag behind Dow and S&P 500. From a micro landscape, for Tesla, it has many positives. Number one is Tesla doesn't just sell cars. It sells an ecosystem, very similar to what Apple does. It has its own supercharging network, on-the-air updates. Also, a different line of business for Tesla, which is Tesla Megapacks, which is used to store energy for businesses which are in solar and wind, is gaining momentum. Also, Tesla is constantly working on newer technology. For example, they're planning to introduce new batteries that can charge 80% in 10 minutes. I think what I have seen from Tesla in the presentation is they plan to launch that in 2024, but based on the track record, I think that's very aggressive. We should expect that this technology to be introduced around 2026, but it will come out. Now, the negatives for Tesla are that many big manufacturers are also entering the EV space with full force. Volkswagen, GM, Toyota, and Ford are all entering in this space. Another negative is that all the Chinese players are also entering and capturing market share from Tesla. NIO, XPeng, Li Auto. In fact, NIO is openly copying what Tesla is doing, and they are working with Tesla many a times to reverse engineer and make products very similar to what Tesla is doing. Now, with all these macro and micro landscapes taken into consideration and keeping all the euphoria that is surrounding this stock, I see Tesla to evolve very much similar to how Apple did. Even if the competition is moving faster and adapting faster and is bringing out similar or even better technology than Tesla is, the user experience and the ecosystem that Tesla offers is very unique. And that is the biggest moat for Tesla. Let's look at the technical charts for Tesla. If we go as far back as 2011, what I see is that the bull run that started in 2011 for Tesla has completed its third wave. Currently, Tesla is in a zigzag corrective pattern, which is the fourth wave of the bull run that started in 2011. This is a deeper correction, and I think Tesla has strong support at $463 with resistance coming at $565. I would advise getting in Tesla at these price levels. The final bull wave which is the fifth wave, should take Tesla's price at a minimum of 1650. I think the price should go as high as 1900 based on the Elliott wave, which leaves us a 350% upside in the Tesla stock, considering if you buy it at current level, or if you buy it in this price range, then your upside potential increases by more than 400%. Now, when can we expect this price target? I think in the next 5 to 6 years, when the newer battery technology comes out, they come out with newer models. I think Tesla is also talking about a $25,000 vehicle. With all the good news coming out, I think Tesla should reach this price point in the next 5 to 6 years. Now, so what is my recommendation? I think JPMorgan Chase, for now, in the next 1 to 2 years, offers good upside potential of 20%. You should invest in that. For Tesla, this zigzag corrective pattern that it is undergoing right now can last for at least 6 months to 8 months, where I see the support and resistance to be around $565 and $463. So what that means is, for at least 10 months to 1 year, you would not be able to make any money out of Tesla. However, if you invest that money in JPMorgan Chase, you could potentially have a 20% upside. So for now, put your money in JPMorgan Chase, and when you see Tesla price reach these levels, invest in Tesla for the longer run and get the best upside potential and get maximum profits on your money. What do you think of this analysis? Please leave a comment and let me know. As always, don't forget to subscribe, hit the like button. Until next time, bye-bye.